Hello dear traders, this is Elizabeth Bilgina and you are watching Daily Forex Trading Plan for Monday the 22nd of July. Happy Monday everyone and the start of a new exciting trading week. As you can see, the economic calendar for today is very light. However, that doesn't mean anything because it is the day that just opens up the week. And if we have a look at what is scheduled ahead in the upcoming days, we will see that the market will indeed prepare for the meetings of central banks, in particular the meeting of the European Central Bank, which will take place on Thursday. Here it is. Some key economic data releases, which include advanced GDP of the United States. That is what will come in the days ahead. In addition, market players also think about the meetings of the Federal Reserve and the Bank of Japan that will take place next week. In addition, geopolitical tensions are in the center of attention as well. The confrontation in the oil trade's most important waterway is taking place right now, and we know that Iranian military defied a British warship, so that has an impact on oil prices, limiting the supply, creating concerns about supply, and pushing oil to the upside. There was a report by China's news agency that local firms seek to buy US farm products. This is a sign of progress in trade talks, trade negotiations between America and China, and that added to some lift in risk-sensitive currencies. Let's see how it is all reflected in the charts. And primarily euro-dollar, there was a big slump to the downside on Friday. For now, the euro has a bit of support in the area of 1.12, 1.1195. However, the single currency is obviously under pressure ahead of the European Central Bank's meeting. It is expected that the ECB will be dovish, so we expect pressure on the support we have mentioned and support which is marked here on the chart to intensify in the upcoming days. Below 1.1180, there will be a sign to sell the currency pair, targeting levels around 1.1115, 1.11, as the market will find its top and will want to test the low levels which we saw in May. This will be a likely and lucky trade for the upcoming days. Resistance is located at 1.1240 and 1.1280, the area which stopped the euro-dollar from advancing last week. The British pound met resistance of the line which goes down from the start of May. Moving averages here are in bearish order. The British pound is under pressure as market awaits whether Boris Johnson becomes British Prime Minister. The information will come out by the end of July, and although British Parliament has made some measure to make no-deal Brexit more difficult, that supported the pound so far, still the risks remain and the sentiment of market players is sour, so we expect that the pound will have difficulties in overcoming the resistance line we have mentioned, located around 1.2550, 1.2570, and will form a top moving towards 1.2440 and probably even lower than that. The USD recovered versus the Japanese yen a bit on more positive risk sentiment. We can see that there is resistance for the currency pair in the area of 108.10, and advance above this level is necessary to let the pair rise towards the next resistance in the area of 108.50. We can have a more detailed picture on the 4-hour chart. We can see here around 108.10, 108.11 there is resistance provided by the moving averages. So this is where we can put our buy stop orders just above that level, targeting 108.55, 108.50 marks. Decline below the levels of 107.80 will open the way down potentially to 107.55, 107.50 mark. If we have a look at some commodity currencies, for example, Australian dollar, we will see that this currency pair met resistance of the 200-day moving average at 0.7088. The moving average does offer rather strong resistance, so now we see a negative reaction, but the pullback to the downside will need support at 0.7015, 0.70. So that levels still can stop the decline in the Australian currency. And if we do fall below 0.70, the next level to watch will be 0.6950 mark. Have a look at the dynamics of oil. Here was a bullish gap on the news we had during the weekend. So now the prices are clustered at the upper border of the recent consolidation range. So the prices can indeed test levels around 64.35, the previous support level, which is now acting as resistance. This is the area we can target. So these are the main levels and main fundamental factors for the key currency pairs. Stay with FBS and trade with all the success.